I'm going to be talking about how I took this USD JPY trade. So if we look at my 1 hour chart, you can see that I've already marked down some ranges, but I will clear it up for you and go down to, let's say we go on a 4 hour. Let's look at the overall trajectory. The overall trajectory of the pair is basically an uptrend. Okay, don't make it too complicated. See it for what it is. Okay guys, so now we can see that the price has also touched down to the level of 158.34 and it's come down again. So if we go on a 1 hour chart, this is where I started basically to analyze my chart. Okay, so I'm gonna delete this stuff so that it becomes a bit more clear. Now essentially this range has been fulfilled, okay, but I can see that essentially there's still liquidity below this area over here. Okay, it hasn't been taken and it hasn't been taken. Why? Because essentially the price is just rising. So as we can see a double top over here, and we can also see on a 15-minute chart basically there's a consolidation over here which got swept. Okay, and it got swept all the way to the 50% of this range. Okay, so basically this is done. Okay, so now following yesterday, that's when I took this trade, I could see that the price was essentially ranging. Okay, so if I do a replay actually, so that's basically what's happened. Okay, so I marked my range. So I went with my Fibonacci, I marked my range from the low to the high. Okay, and basically what happened was that at 3 o'clock, that's basically when I took my trade. So this is the 3 o'clock range. Okay, so when there is a range, guys, okay, what you can expect is that there is a liquidity above and below. So now what happened at 1:30 when the news came, essentially what happened was that this liquidity got taken. Boom. So now the liquidity lies only above here. Now when there is a range essentially which is formed around from 1:30 to 3 o'clock, what that means is that there is liquidity here and liquidity below. So what's the significance of this? Okay, the significance of this is essentially that the price is either going to get attracted to this level or this level. Okay, now the reason why I went for shorts yesterday was because obviously you can see that there is a consolidation over here as well, and of course that what that means is that there's liquidity above and below, but this liquidity got taken. What does that mean? It means that the price pushed to that level, so all the orders that were here basically got taken away. Okay, so the reason that I went for a short, it's because like I mentioned to you before, there's a lot of liquidity below this. Okay, and what does that mean? There's place 1, 2, 3, and not just that, there's this big liquidity spot over here. So basically this is like a liquidity pool. So if there's liquidity downside and not that much liquidity above, that means that more than likely the pair is looking to get shorted. Okay, so, and like I said, I'm a day trader, so that's another reason as to why I can use the information that I have in front of me to make calculated decisions. Now, we do see another confluences in the pair as well. Now, the point is that this is not getting broken. So as you can see, 1, 2, 3, and it's between this range. So it's not going above this level. It's not looking to break this level yet. And also, this is a very key point, is the fact that I shorted at the 75%, so at the top of the range. Okay, and if you see, basically I'm gonna put in 3x. So if you see what happens, okay, the price basically moves, and essentially what happens was that once I saw that this price went over here, okay, so that means that it's taken these orders, okay, and you can see also something else, guys. So this is basically this whole black candle, it basically got filled in a way, And what does that mean? Basically, when big candles like this get filled, it means that, and this is a sell candle, okay? So my black candles are basically red candles for you if you have the default settings on your trading view. So what happens is it means that more sell orders essentially got triggered, okay? And essentially what happened was that, oh, essentially what happened was that once I saw that it basically came back into the range, okay, and once it came back into the range, that's when I basically took my sell, okay. And when I took my sell, I had a 10 pip stop loss, okay, and the reason why is because I took the trade in the 1 minute, okay. And there is another big reason as to why I took this trade, guys, okay. So first of all, you can see there is an FVG over here, okay, and it got down all the way here and it got respected, okay. So actually let me change this so you can see it. So that's the first confluence I had. First of all, guys, so just to mention again, it broke the range, okay, with high volume, okay. So it wasn't low volume, it broke the range with high volume. That means that there is volume in the market. Now it means that I can actually check my trade. So it broke the range with high volume. It didn't break this new consolidation range again. Then what happened was that essentially an FVG was created, okay. And once I saw that the FVG got respected over here, it didn't reach the 50% mark, it means that this FVG is valid. It means that there's a lot of sellers, okay? And then basically this is what happens. So let me show you guys what happens. So it moves, moves, moves. And because I took the trade close to 430, then the volume was a bit low, so the pair basically had to, it needed some time to basically go to my TP. But that's basically what it is. As long as you find your entry, okay, you find your entry, you're more than likely to find good confluences, okay. So what does that mean? So the 50% of this previous range, okay, which is which this I drew this yeah, this was basically Asian session, okay, guys. So if I put this, you can see the yellow means Asian session for me. So basically what happened was that the 50% range, I was targeting the 50% range. So I was not only targeting the 50% range of the previous range, but was also targeting the bottom of this range. So because of that, I had two confluences as to where I could exit my trade. And because it was 10 pip stop loss, and I'll also explain to you why I had a 10 pip stop loss and no larger than that. Because my logic was, guys, that if I have an FVG during prime time session and is respected twice, okay, more than likely if it goes above this, then my trade is invalid anyway, okay. If it goes above this, then it means that, okay, the market is not ready to go down, okay. But I was right. So essentially that's what happened. This is where the trade hit TP. So I had to wait basically 1.5 hours to make a 1 to 2 risk to reward. And as you can see in your screen, you can see that I've made essentially $400. And this trade, I had to be very, very patient, guys, because let me tell you why I trade only after 3 o'clock. Because let's say I entered at 2 o'clock or even 1 o'clock. What would have happened is that it wouldn't have hit my target and I would have actually hit a sell over here. Okay, guys, so that's the reason why you need to only trade in a specific time, either 7 to 9 London session, or you trade from 3 to 8 p.m. UK time, so that you're able to just not get caught out in this random movements that happen because of 1:30 news and 3 o'clock news. So after the news is done, that's usually when the volume comes in and the momentum is in the market and you're able to make these sweet trades like this. And it didn't take me too long in order to find this position. I just had to sit in my hand and actually look at the market and be able to understand what all of this data means in my screen. So the foundation of this strategy is Fibonacci and liquidity pools. And if you want to know more a little bit as to how I do this just trading once a day, and I make between $300 to $400 a day, then just send us a DM and we'll be more than happy to explain to you how we do this. Thank you.